Hi, this is Dave Cotter with Integrity Capital. I'm going to spend a few minutes for those that are trying to ask themselves the question is, how do I qualify for an owner-occupied commercial real estate loan? If you're a small business owner or somebody trying to help a small business owner, this will just help you have some general guidelines and things to be aware of in order to qualify for a commercial real estate loan. So when you're buying or refinancing a commercial real estate building to occupy, the first thing you have to know is you probably have to occupy about 51% of the space in order to be eligible for it to be owner occupied. When you're buying, you really have two different ways you can go. It's either conventional or SBA. If you go conventional, you're going to have to put down about 20% of the purchase price or 20% on the equity. If you go SBA, you could technically go up to 90, potentially even higher of loan to value of the actual purchase price. So those are two different distinctions when you're doing this. In terms of a qualification, here's the major things that lenders are looking for. The first thing is, and the main thing I should say, is they're looking for cash flow. They're really trying to find out, does your business historically and even currently have the ability to service the debt payments by 1.2 to 1.25 times, and you're probably asking, what the heck is that? And if you sort of use a scenario here, for example, if you made $120,000 a year and your debt payment for the building was $100,000 a year, they're going to take that $120,000 of net income, not gross, but net after all your operating expenses, and divide that by your debt payment, and that will show you that it's 1.2 times. If you made $100,000 a year and your debt payment was $100,000 a year and you divided that, that's 1 time. So that would not qualify. And then if you had 80,000 divided by 100, you're at 0.8, not going to qualify. So again, they're looking for this 1.2 to 1.25, which is about 20 to 25% above break even of the debt payment that you're going to have. So just to kind of give you a gauge, that's the main thing they're going to focus on, which is cash flow from the business. And that's after paying all of the operating expenses, your debts that you already have in there, and then what is the excess cash flow in order to service the debt. They will focus predominantly on the tax returns historically. So they're going to look at the actual tax returns to see what hit the bottom line. So if you're maybe in that situation where you're trying to lower your tax base and not show any profit, that's probably not going to help you. They're also going to look at how much debt you have in the business to make sure that you're not overloaded on debt. They're going to look at your personal credit. They're going to look at if there's any bankruptcies, foreclosures, short sales, lawsuits, all those come into play. They don't kill the deal, but it definitely can make it more tricky for you to be qualified. So FICO score is not the only important thing. They're looking at a bigger picture. They're going to look at your personal tax returns and can you cover your expenses and obligations personally. So they'll look at what's called a personal financial statement and see what your cash position and your income position is. They're going to look at your sort of credentials to see how long have you been doing this business? Do you know what you're doing? Do you have the capacity to run this business? So if you don't have any history in the area, that could be a challenge for you getting approved for a loan. And then obviously they're going to look at the collateral itself. So what's the condition of the property? Where's it located? Et cetera, to see if that's it. So that kind of gives you a general idea. Again, cash flow, credit, just talked about that, collateral, and then credibility. So that just should give you a snapshot of how to prepare yourself. And obviously, if you have further questions, you can give us a call at 480-219-1205. So again, this is how to get qualified for an owner-occupied commercial real estate